September 10th, 2024. I'm starting the review a little early today because I have some stuff to do this afternoon. So, as you can see, we got a gap up on the open, and I think there's a lot of things that are important that go into the context of the day. For one, I thought it was important that we had a wedge with yesterday, bar 9, bar 42, or 41, any of these highs really, and then bar 1. It was pretty clear that we were forming a wedge. The thing about this wedge is that the wedge lasted about 74 bars. And generally, when you get a correction from a wedge, the correction usually will last about half the number of bars as the actual wedge. So you get a 74 bar correction, you should be figuring a 35-ish bar correction, 35 to 37 bar correction, and we ended up having a correction that lasted 34 bars. And it moved in two big legs, one pullback, two. So really important to note on the open that the odds favored two larger legs sideways to down, lasting for probably a couple of hours. So I thought that the context on the day was maybe slightly more bearish. Additionally, one other thing that I wanted to mention with that was the context on the daily chart. So coming into the day, you can see that this was a buy signal bar. So the prior day was a buy signal bar after a few legs sideways to down. Bulls were hoping this is a second leg trap, and that we were going to continue up pretty strongly. However, on the daily chart, whenever you test a buy signal bar that's on the daily chart, normally what happens is you go above it and then you pull back below it and then you go back above it at some point later. So it's pretty unusual on the daily chart to test above a buy signal bar and just vacuum straight upwards. If the bulls were going to do that today, though, if they were going to get the vacuum, they probably would have kept the gap open with the 44 high and the bar of 1 and 2 low. So you can see on the open today, we have a gap above the prior day's high. If the bulls are able to keep that gap open and start getting bull bars closing on their highs, that would increase the chances that we're going to get a bull trend from the open. Bar 1, a bull bar, but a big tail, or sorry, bear bar with a big tail on the top and the bottom. So probably buyers not too far below, probably sellers not too far above. Bears are hoping that bar 1 is the high of the day and the gap up is a climactic bull trap. However, I'm not really willing to sell below a bear bar that has a big tail on the top and the bottom. Bar 2, consecutive bear bars, one closing near its low, bar 2, but it's not really worth selling. I think if you're selling here, you're probably going to have to scale in higher. So your stop probably doesn't go above 1. Stop is probably a measured move up of some type, maybe a measured move up of stop of bars 1 and 2 plus a couple of ticks, and you'd be selling more above bar 2. Probably made more sense to sell above bar 2 than it did to sell below bar 2. You can see bar 3 overlaps with the 44 high, which decreased the odds of the bull trend day. Had there been no overlap with the 44 high on bars 2 and 3, it would have increased the chances that we could get some sort of bull trend out of this. However, with the disappointment and the overlap of these bars with this high, makes it less likely that we're going to get something like that. So while bar 3 is a big bull bar closing near its high, the context is not as good as it was, and we still have a big wedge, so possible we're going to need two legs sideways to down. Bar 4, the bear bar. For the bears, it's a double top, 1, 4. The bulls are hoping that this is just a pullback from 3. The bar 4 is so large and closing near its low, or near enough to its low, I suppose, that it's probably better just to, probably better for the bulls not to be long. I think, the bears have a better chance a little bit right now, but they need to get some sort of good looking bear bar closing near its low. And, while you can sell below 4 for a swing, your stop goes above the bar 1 high, and you're just taking a chance that we sell off quite a bit. It's probably not the best thing to do. So I'd just rather wait. 5 is a possible wedge, 1, 3, 5, and a lower, you could say lower low double bottom with 3. That's a reasonable argument as well. If you're short, do you get out above 5? No. I think if you sold below 4, you just keep your stop above the high of the day. The trade you took is relatively low probability, and it probably wasn't going to go straight down. So I think if you did sell below 4, it makes more sense just to stay in the trade and let yourself get stopped out if it comes to that. So 6, disappointment for the bulls on 5. Not all that surprising. You can see we ended up, even if classic trading range day behavior, even if you bought all the way up here and you scaled in, you were able to get out back up here, which is really important. Basically just trading range behavior. If the bull bought here and didn't panic and just continuously scaled in, they made money. So 6, it's possible head and shoulders. 1, 4, 6. You could argue truncated wedge, I suppose, but it's it's a bit inverted. So it's 3 attempts up though is the important thing. So it looks a little weird, but it's 3 attempts up for the bulls. The bulls are again hoping that this is just a pullback, and now we're going to get another reversal up. However, we've had a few chances to reverse up, and it doesn't seem like it's taking. So it's possible that we start to go a little more sideways down here. Additionally, I think we were always in long, and bar 6 made that a little more questionable. I still think after bar 4 and 5, we were always in long, but bar 6 is big enough to get its own second leg down. So it made me think we might be always in short. It would have been, I didn't mark it because it didn't close near its low, and I thought that would be a much better short if it did close on or near its low. But I don't think that it's wrong to sell below 6. 7 consecutive bear bars, but a big tail below 7. So probably sellers above, probably buyers not too far below, but I don't really want to buy until we get to the average price. You can see bears, they sold above 7. They ended up scalping out around the moving average. So they were able to make, pretty good profit, pretty much a full 10 points during bar 8. And most traders are just going to take that. If they get a limit order trade and they're able to make a quick 10 points, especially in this market condition where a swing can be, 20 points, and scalp can easily be 5 points, and they were able to make double that. So a really large scalp. I think a lot of traders are just willing to take that. And that's why we got bought up so much on bar 8, because when we got to the moving average, the bears bought back shorts. However, the bulls aren't really willing to buy in this area. It was a triangle, possible triangle open. And we got basically a measured move down, I would imagine, something similar to it. Okay, not that one. But I'm sure if I kept drawing them, you'd find the measured move that we went down on bar, maybe just of bodies, bar 8. Anyways, that's right near the moving average. But anyways, bar 9, a huge bear surprise. For me, when I see bar 9, I think we're going to get a pullback and then maybe trend resumption later. And as you can see, we ended up getting a wedge pullback. It's a really common pattern when you get a wedge to a double top. So bar 10, bar 12, and bar 24, the wedge double top with bar 9. Possible, 40% chance you get a break below the neckline and a measured move down. The neckline being the bar 10 low. And you can see that's about the low of the day. In general, bars like bar 9 are going to get measured moves of the size of the bar. It doesn't always have to be down though, and it's not always immediate. So if you sold to close a 9 and you just held for a measured move down, you would have actually ended up making money. But it's obviously really hard to want to do that when you get such a deep pullback. So I think, traders on both sides see that it's a sell climax. The difference is the bulls are hoping that the sell climax goes sideways for a while and the bulls get a major trend reversal. And the bears are okay with a rally here so long as it doesn't go too far above the bar 9 high, the sell climax high, which is going to be a magnet above. So they're trying to get sellers if we do get back up towards the bar 9 high. 10. You can see a reversal attempt up by the bulls, but a big tail on the top and a tail on the bottom. Really not that good. Bulls are hoping 9 is a bear trap. Now we're going to get a rally, but I don't think it's all that ideal, especially considering how poor bar 10 closed. Bar 11 trades down to around the bar 9 low. So any bear who sold below 9, disappointed 10, is going to use 11 to buy back their short. So that's exactly what's going on here. The bulls, they know that the bears are going to get their second leg down. So they're thinking 1 pullback 2 as well. And then now they're hoping to get a bounce. You can see we do get a good looking bounce on 12. It's possibly 1 pullback 2. So the bears are hoping this is 2 legs up. Then we're going to start a reversal down. However, we're not going to correct for 3 or 4 bars and then sell off immediately again after a bar like bar 9. The pullback is probably going to be complex, and a lot of times it's going to last 10 to 15 bars like it did here before you end up getting trend resumption. The market bell is going to go off in a minute, by the way, so just don't be scared by that if it does go off. So 12, a bull bar, but just looks climactic to me. Looks like big down bar 9, big up bar 12, and probably just confusion overall. 13, an inside bar. Let me just get a sip of water real quick. So 13, an inside bar, a bear bar, but a tail on the top and on the bottom. Bears, hoping it's some sort of good low 2, but reality is we're in a 4-bar micro channel and it's a big bar with big risk. So my guess is there's going to be as many buyers below at least as there are sellers below. So not that great. 14 trades back up to around the 12 close. We now have 3 pushes up, 1 pullback, 2 pullback, 3, but we're getting alternating bars. So it's a little bit difficult. You can see from 9 to 19, we got alternating bars, bear bar, bull bar, bear bar, bull bar, bear bar, bull bar, which is a clear sign of trading range trading. So 15, an outside down bar, a bear bar closing near its low. Some bears might sell, hoping that we're going to get a swing down, but I think it's really not all that great. Probably just better to wait and see if we get it. Again, we might still have to go more sideways first before we get a second leg down to 9. I think 9 is still the dominant force in the market. 17 traded back down to around the bar 9 low. You can see one tick below the bar 9 low. So the bears who sold and did not quickly get out, they scaled in maybe up here, and now they're buying back shorts. 18, the bears are hoping that this was a complicated leg 1. So leg 1, pull back, leg 2 was similar, but they were hoping for basically a leg 1, leg 2 measured move, and that we might be getting the start of the second leg with 18. So they're still thinking this is a minor reversal and possibly 1, 2, 3, a wedge up, which is very possible. The bulls are hoping that we got a trend line break. So trend line basically bar 9, then trend line break here, and then a higher low major trend reversal. However, the problem that the bulls face is if you're buying, your risk is pretty big, right? If you're buying above 18, your stop's below 10, your risk is reasonably big, and you're buying towards the middle of this lower tight trading range. So it's okay to do it, but it's really not as good as it could be. 19, disappointing follow through, still alternating bars, but probably buyers not too far below. And then an outside up bar, but a tail on the top, but still a good looking outside up bar on bar 20. Do you buy above 20? No, I would not personally buy, or so you could buy above 20 and stop below 20. That's a reasonable thing to do. However, the upside might be limited because the bar 9 high is still going to be a magnet. So a possible higher low major trend reversal, but the area was not all that good for the bulls, and we need to get good looking consecutive bull bars. And if we don't get them, bulls might start to scalp out. You can see the bulls who bought above 18 scalped with 10 points, a little bit more. Bulls who bought above 20 able to make 5 points. So 21 follow through for the bulls, consecutive bull bars 2021, but a tail on the top and bottom of 21. So while it is follow through, it's really not as great as it could be. 22, another bull bar, but we have another tail on the top of 22. So we're going higher, but we're within the wedge territory of the 10, 12, and 21 high, or 22 high. So I'm not really sure it's as good as it could be. And you can see 23 pulled back, so it created a higher low on a lower time frame on 23. It's an inside bar, a high 1 buy for the bulls. They're looking to take for a swing, but you need good follow through. And if you bought above 23 and you get 24 as follow through, that's relatively disappointing. It's possible we're getting some sort of parabolic wedge, bounce 20, pull back 21, bounce 22, pull back 23, and then bounce 24. So it could be a parabolic wedge on a lower time frame. And then you can see we again get disappointment on bar 25. So as we rally back up to the 24 high, instead of buying more and driving the market up to a new high of the day, bulls decided we were close enough to the bar 9 high, and we had enough of a wedge. It ended up becoming a wedge correction and a wedge double top with bar 9. So wedge double top is a pretty reliable pattern. Like I said, 40% chance of a break below the neckline and measure move down. The traders who sell below 25 are looking for a swing, and bulls will exit but it's hard to sell after 5 straight bull bars, and the bear bar doesn't close on or near its low. But after the wedge, bulls will definitely exit and look for 2 legs sideways to down. Additionally, this could have been the first leg down from the larger wedge, and we might be getting a second leg down. 25, a bear bar closing near its low. 26, a bear bar, but a big tail, or a tail not quite closing near its low. But it is a big enough bar that we're going to get a second leg sideways to down. So some bears would sell to close, use a wide stop, and be willing to scale in if we bounce, betting that the first reversal up is going to be minor. 27 is a disappointment bar for the bulls. They were hoping to get some sort of reversal back up here and a breakout above the wedge, and instead we have 3 straight bear bars. So 2 being reasonably big, and it's a low 1 short. So some bears will take the low 1 short below 27. Basically, again, still taking a chance we break out below the neckline, below the 18 bar range, and get a measured move down. We did get the measured move. Basically, it was down in this area. 28, another bear bar, but a tail on the bottom, but it's still okay to short. We have 4 straight strong bear bars. It's the strongest move we've had so far today. So you could sell below 28 and take a chance. 29, another bear bar. Again, okay to sell the close, sell below, and just take a chance we keep going. 30, 5, so 6 straight bear bars. Usually after a sell to close bear trend, after 2 or 3 bear bars, the market is, pretty overdone. Or I think it's after 4 or 5 that you have to expect a pullback. But obviously the strong sell to close only started on 28, 29, and 30. So again, probably not too much more to this bear trend. It's pretty overdone in the short term, 28, 29, 30. It's possible we pull back if we can keep the gap open with the 30 high and the 10 low. So if we don't pull back into that area, then it might still be a trading range day. Or sorry, it might still be a bear trend day. However, whenever we get a pullback, that's a big area to pay attention to. 31, a bear bar, but a tail on the top and the bottom. So probably more of a sell to close than sell below bar, if anything, if you do sell it. And then 32, an inside bar, a low one short, but probably buyers below. We have an outside down bar on 33. So possible spike, pullback 32 and channel 33, but I don't think this is corrected enough in order for me to be doing that. And I think that, as strong as this is, it might be more of a leg in a trading range. You have to keep in mind where we are. We're all the way down here where there were bulls buying aggressively yesterday. So we're in an area where bulls bought really aggressively the last time we were here. And even over here, this was an area of bullishness, bullish. So we're still in that area where the bulls continue to buy. You do have to keep that in mind. A sip of water. Bar 34, outside up for the bulls, bull bar closing on it, basically on its high. So we have an OO pattern, 34, 35, and 60% chance of some sort of measured move here. You to the upside, bullish OO. So reasonable to buy above 34. Now, the problem is with how strong the move down is, you might make you hesitate, but you can buy and just take a chance that this is not a bear trend day, that we close the gap with bar 10 low and the bar 30 high. So you could buy above 35, risking 10 points, trying to make 12 points. I think 60% chance to get it. So it's a reasonable thing to do. But we're probably not going to go straight up because the move down from 25 to 31 was pretty strong. 35 bull bar, but it's consecutive bull bars, 34, 35. But you really, this is not ideal follow through for the bulls. But you also have to keep in mind you probably weren't expecting ideal follow through, considering the fact that we just had 7 straight large bear bars. So you probably were not expecting us to go straight down from here. 37, an inside bar, a bull bar closing near its high. Do you buy above 37? Well, yeah, you can. It's a high one. So if you're taking it, it's a swing buy, but it's probably credible, taking a chance that we at least close the gap. And again, we're still not even at the middle of the day yet. So the rest of the day is still up for interpretation. 38, another bull bar. So good that 37 was a bull bar closing on its high. You can probably pull your stop to below bar 35 at this point, taking a chance that, if we're going to rally and we're going to get this swing up, it probably shouldn't fall below the 35 low to possible channel low. Really, below the 31 low is still probably more appropriate until you get like bar 39 or bar 40. But it's reasonable to have your stop I think below 35 after the close of 38, since you have that higher low now. 39, another bull bar, but we have tails on 38 and 39. It might still be a minor reversal. However, the channel up is really tight, so this could be turning into an endless pullback, which is obviously what we ended up getting. So you can see on 40, we have a bull bar closing near its high, and bulls who are desperate to get into the market, they see 40, and then they all basically just decide to buy at the same time. However, when that happens, you obviously get a climactic bar and a breakout above a channel. When you get a breakout above a channel, in general, 75% chance you're going to have to test the other side of the channel, which we did on bar 43. So while this is a good looking bull bar on 41, there are probably more sellers up in this area than there are buyers. I assume we're also a little bit past the 50% correction of the sell-off. Meant to put it on the close of 31, but you get the point. We're in the general area of 50%, so probably going to be some profit taking. Additionally, we just closed the gap with the bar 10 low and the bar 30 high. So the bulls have accomplished their goal, and some of them are going to sell over their longs for the time being. 42, a bear bar closing near its low. I would not sell below it. but I don't think it's wrong to get out of longs below it. I think, any trader, I think 42 is mostly bull selling, not really as much bears. It's just bulls scalping out who bought for any reason, seeing a good price on 41 to get out of their longs. 42 is a bear surprise bar a little bit, but you're not selling below it for a midday reversal. The channel up from 34 to 42 is way too tight. There's way too many bull bars to be taking that kind of short. So it's really just not worth it. 43, a bull bar closing near its high. You can buy above 43. And I think the main reasoning for buying above 43 is I think it's a surprise. The bulls, if they exited below 42, they did so because they were expecting a couple of legs sideways to down. Instead, we have a bull bar closing near its high. So one of the reasons the bulls exit is because their risk is large and we're in a profit taking area. And then so you exit at the close of here or you exit below here because your risk is large again. Instead, we get a bull bar closing near its high on 43, a possible breakout above the wedge and a measured move up. And again, a bull bar closing on its high. So reasonable to buy above 43 because now your risk is small. You're risking 5 or 6 points, trying to make 15, 20 points. That's a much more reasonable equation. It is still probably, excuse me. It is still probably more of a trading range day, so you have to keep that in mind. And you might need to take quick profits, but still reasonable to buy above 43. 44 consecutive bull bars, but 44 has a tail on the top. But still consecutive bull bars, reasonable to be long. We are always in long. I think we've been always in long since 34. So if you're buying up here, you're betting the breakout above the wedge is going to work and that we're going to get a measured move up. And enough bulls bought the close that we get a big bull surprise on bar 45. Bull bar closing basically on its high. 45 is climactic, so some bulls will take profits. You can see if you bought above 43, two bars later, you have a 10-point profit and it's a trading range day. A lot of times when traders can get a quick 10-point profit on a trading range day, they're not going to sit around and wait to see what we get. We obviously did get 2 legs up from this and we got the measured move, but it just ended up being the leg 1, leg 2 measured move. And the measured move ended in the final flag. You can see 62 through 68 is a final flag for the bulls, a tight trading range. So you're expecting us to test back into that area later. So 45, a bull bar, but climactic. 46, follow through for the bulls, but a doji bar. So how good is it really? It's probably not all that great. There's probably more buyers below 46 than sellers. However, this is not overly bullish and we're in an area where there might be some profit taking. 47, a high 1 for the bulls. We might be starting the channel. So bulls, they're hoping to buy above 47, probably stop below 47, looking for possibly the start of a bull channel. However, we never trigger above 7. Instead, we trigger below 47 and we find more buyers below 47 than sellers, which is fairly normal considering the fact that we've had so many straight bull bars here and we do form an open gap. So 48, a bear bar, but not really a great looking sell. We're probably, we'll see if we keep the gap open. You can see traders bought the close. We never traded below 48. Bulls might have exited below 48. So instead, bulls bought the close, 49, a bull bar closing near its high, a small tail on the top, but a reasonable buy for the start of the channel since the market cycle spike pullback channel. We essentially got a spike and then a pullback, but then another spike. Some bulls would have bought thinking it was going to be the start of a channel, which would have been reasonable, but instead we just got another spike up. So it resets the market cycle. 43 through 47 reset the market cycle. 50 consecutive bull bars, 49, 50, but a tail on the top and bottom, and it's really small follow through, so not really worth the buy. 51, tail on the top as well. We're possibly forming some sort of wedge channel. 45, maybe 50, and then 53, 54, something along those lines. 52, a bear bar, but to me, after 3 straight bull bars, there are going to be more buyers below 51 than sellers. And even if we trade below 52, it's a poor low 2 for the bears. So it's low 2 entry bar for 51. It's really not all that good. Probably more buyers below than sellers. Bears need to get a couple consecutive bear bars closing near their lows in order to convince traders that this is no longer a bull trend. I think if you're long, your stop is now below 48. 53, another bull bar, but an inside bar. So we have an IOI pattern, a possible final flag. No top in sight, but this is not really that great for the bulls. So bears don't have any sort of credible sell, but we're going sideways scenario where we could start to go more sideways to down. 54, another doji bar. So we are drifting up and getting higher lows and higher highs, but I don't know. We'll see what happens. 50, 55, a big bull bar. So I think it's, this is the give up bar from the bears, admitting we're going higher. Some of the final bulls will buy. It's okay to buy. I probably wouldn't buy the close of 55 in case it's a trap, but you could buy above the high one, bar 56. That would be a reasonable thing to do. So, anyways, 55, bears give up, possible measured move up. This is possibly a measuring gap. And I don't know, maybe we're going somewhere up here, something like that. A lot of signs point towards the area where the final flag was. So, possible measuring gap. 56, an inside bar, a bull bar closing near its high. It's a high one for the bulls. So, if you're buying above it, you're taking a chance that this new breakout on 55 is going to be successful. Now we're going to get a measured move up. If you're taking the buy, your stop probably goes below the 52 low or the 50 low. And an outside bar 57, but you can see probably buyers below 56 and probably sellers not too far above. 58, another bull bar, but tails 56, 57, 58. Probably buyers, again, below 58, scaling lower. This has been a tight channel up, so we keep forming wedges, but they obviously continuously become meaningless because wedges in bull trends are generally pretty meaningless. 59, buyers below 58 during 59. It's bad, wedge top for the bears, and the bulls see the same thing. Bad sell below, so they're buying below. 60, a bull bar closing near its high, buy above 60, but probably not too much left to the upside here. Follow through 61, consecutive bull bars, and then more follow through 62. Then we went sideways 62 through 68. So you have to keep in mind, this is a tight trading range. We have 1, 2, 3, 4, 5, 6, 7 straight doji bars. And when you have 7 straight doji bars, that is usually going to be a final flag. And so this, to me, screams final flag. And when we have a final flag, the market usually will go a little bit higher and then test back into the final flag. And what's a target for the market going a little bit higher? Well, I think the high of the day is a pretty good target because it's pretty close. And a lot of times when you get this strong selling, you'll try to basically just test the high of the day, but you're not going to get far above it. So to me, I was looking at this thinking we might end up just testing back up to the high, and then selling back off into the main area here. So 69, a bull bar. Some bulls will buy for a scalp, trying to get to the high. You can see we do 71, 72, and then we sell off 74 back into the tight trading range and go sideways. For stop orders, I thought, 4 possibly for a swing. But none of this stuff is all that awesome because, nothing's quite closing near its low. 18, I thought the bars were good on 18 and 20, but the context made it a little difficult. But you could buy above 18 or you could buy above 20. You exit below 25. You could sell below 27, a low one short. So you're taking a chance that this is a new bear trend and you're selling below for a low one short, possibly, a wedge, double top, measured move down. And sell the close, sell the close, sell the close. Not really sell the close, but you're hoping final flag. So if you're a bull, you see the 00 pattern to 40, 34, you're taking a chance. It's a trading range day, and we're going to at least rally back up to the bar 10 low. We're almost outside down at this point. So if we don't quite go outside down, we could rally quite a bit here. But reasonable to buy above 34. If you do, and you don't get out up here, I think you bulls probably exit below 42. And if you do exit below 42, you buy it back, you're long above 43. I think it's hard so you can buy above 37, high one, same premise as 30, 34. Possible bull trend since trading range day, overall trading range behavior. But you can buy above 43 for a swing, stop below 43. And then you can either scalp a piece or hold and swing for a leg 1, leg 2 measured move. You could buy the close anywhere up here, but difficult to buy this close on a possible trading range day. And then you could buy above 56 or below 56. Probably buy below 51. And you could buy above 60, getting climactic though. And then that's the end of the day. So basically a midday reversal today. On the daily chart, I'm going to pull up the extended hours daily chart. On the daily chart, it's a follow through bar for the bulls. You can see, I don't know, if you just use the bar, maybe it was 50%. Yeah, so we pulled back to basically exactly 50% of just the September 9th bar. and we bounced back up towards the high. So it's not that surprising that there were buyers stepping in at a 50% pullback of the good-looking bull bar. So what do the bulls want? Well, they want the bears to give up tomorrow and get a really good-looking bull bar closing near its high, but I'm not really that sure that that's going to happen. I think we're going to go a lot more sideways in here before we rally, if we do rally. So I think we'll probably be mostly sideways for the next couple of days, and then potentially try to get the bounce. The weekly chart. Again, the bulls are hoping this becomes a really strong bull bar closing near its high, but they probably needed to do more. This is not a big enough bull bar if I'm holding long right now. So in order to convince me, I need this bar to get a little bigger. And then obviously the monthly chart, we're pretty early in the month, but the bulls are trying to put a really big tail on the bottom of this bar. And they're trying to get the buy signal bar to trigger above August. I don't know if we went, so we went to about a 50% pullback. Curious if it was exact. No, so it's not going to be exact, but we went to about a 50% pullback before finding any support. So tomorrow, for me, I think be patient with the prior day's high. So assuming no gap, there's probably going to be sellers somewhere up here on the moving average. But if we sell off, there'll probably be buyers down here. So you have to keep those things in mind. All right, that's the video.